What is going on, everybody, and welcome on in. In today's video, we're diving into another options trading strategy here, and we're talking about the Condor spread in today's video. We are not going to waste any of your time. We're going to be diving right on in. Let's go over a brief overview, and then we'll dive into the platform. We're going to be using the Webull platform in today's video. It is a free platform that anybody can use. There'll be a link in the pinned comment and description box down below this video where you can sign up to Webull for free. You don't have to deposit any money, so you can kind of follow along. Or if you do deposit some money, they'll give you some free stocks in the process. Again, you can utilize other brokerage platforms, but the example we're going to use is Webull. So if you want to kind of copy that, that would be a great place to go. So a Condor spread is a spread that is non-directional. So we're not necessarily betting on, let's say, Amazon, Apple, Tesla to go up or to go down, right? It could go up or down, and we could make money, but we'll dive into the details. Okay, so it's a non-directional option strategy that limits both the gains and the losses while seeking to profit from either the low or the high volatility. Now, we'll show you through examples what we mean and how that will work out, okay? So when we utilize a lot of these different spreads or these different options trading strategies, the great thing about it is that we are able to kind of minimize our risk. We also cap our gains to some degree, but we can minimize our risk, okay? So it kind of helps and makes this a little bit easier on us. And to be honest, many of these different strategies actually have a much higher percentage of profitability. So, maybe you don't make as much money as, let's say, playing a directional, bet on Tesla to go up or down, but it's a great way to be more consistent, okay? That's why a lot of people like to utilize spreads, and they're more advanced, although they really don't have to be. So what you'll need to do is make sure with your brokerage platform you have the level of option sophistication to be able to trade this, because they may limit you depending upon your experience and your options trading level. So you may need to do that, which is easily done inside the Webull app. A quick Google search on your brokerage platform and how to enable options trading or how to enable a higher level of options trading should be able to help you guys out on that front. Okay, let's dive a little bit deeper now. We're going to be using multiple options in this strategy. However, what we need to understand is that all of these options will have the exact same expiration date, okay? That is it, okay? Now, when we're dealing with a lot of options, the confusing way to go about it is to try to buy them all at the same time. And that's one way you could technically do it, but with a lot of brokers these days, once you click on a certain kind of option type, you're able to have them do it all for you. And so we'll dive into how that is done on Webull. So there's like a couple of different types of Condor spreads. There's the long Condor spread with calls, which is a net debit out of your account, okay? A debit to your account means you are paying money right now when you click on that limit buy or that buy order. You're paying money out of your account into this option contract to get into this position, okay? Ultimately, when you do this, you're looking to sell it for more money. Great. When you have a net credit, you're getting paid initially. When you close that position, you may have to give back some of those gains or some of what you originally got as a credit, but you're getting paid initially. So as long as you're not paying back more than what you paid to close your position, the net credit is profitable as long as you don't pay back more when you close it, okay? So that's kind of the net debit versus credit. And we have some more videos on the channel in the options trading playlist. We dive into credit spreads, debit spreads, and we dive deeper into some of that stuff. It would be a great basic kind of, baseline to understand before we dive into it. So here's a long Condor spread with calls. So each of these options, A, B, C, D, those are all different options. We're going to buy different strike prices, different strikes, and they all expire on the same day. So it could be the end of this week, it could be the end of the month, it could be the end of the year, right? Whatever you want to do. They all expire on the exact same day, and we proceed as follows. We buy a call with strike price A, the lowest. We sell a call, strike price B, second lowest. Sell a call, strike price C, second highest. And then buy a call with strike price D, which is the highest strike price. What you're going to want to do is have the actual price of the stock be roughly in between B and C. Okay, that's going to kind of make this the easiest kind of way to work things out. However, if it's not, if let's say it's kind of skewed and the underlying stock price is, let's say, around B or closer to C, then you might have a kind of strategy that takes on either a bullish or bearish, as they say, bend in this case. So you kind of need the stock to move a little bit in one direction, but kind of stay between a certain level for you to make money, okay? So in this case, right, just looking at this graph, which we're going to look at more graphs like this very, very soon, we're going to make money if the stock ends up expiring between B and C, that's how we hit our max profit, between B and C. If this stock finishes by the expiration date right in between B and C, or like somewhere in between those two prices, those two strike prices, we hit our max profit. And if the stock kind of finishes down below A or above D in terms of its price versus A and D's strike price, well, that's our max loss. And so again, we have a max loss and a max gain before we go into the position, and you should be able to understand those levels before you jump in so you have a better understanding and you know what to do. You can also utilize the long condor with puts where you're buying puts, and then the short condor means you're going to be selling calls. So let's say you're going to be selling all these calls, and then you're going to be selling puts. We'll go through these examples now here in this video. So let's jump into Webull and let's utilize a very common stock to show you guys how this works. Alrighty, so we have Apple pulled up here on the screen for us. What I'm going to do is I'm going to go up to my options tab. And if you guys don't know how to get to that, I have plenty of videos going over how to use Webull, which would be a great place to start. But I have the options widget, which I then added to my little tab right here. And let's look for some options. Let's go to the December 31st because we can kind of go out to the end of the year and it lines up nice. Let's just utilize those. Now, where it says single option, I'm going to click on that and I'm going to change that. And here is where we beautifully can just move right along to where we want to go to. I'm going to go to the Condor. So we have Condor right there, and just like that, boom, we're into the Condors, and now we can go at what we want to dive into for Apple. So we see that we have those 4 strike prices all lined up across the middle, and we can go on the put side, the right-hand side, we can go on the call side. I'm going to go on the call side, and I'm going to go with one of these contracts that is relatively close to where Apple is trading at right now. Then click on Control, Buy, and here we go. So right now we are looking at the table, and I've adjusted this just a touch here on these Apple contracts, okay? So what we are looking at right now is the table, and I can enter my order in through this. I'm going to change the quantity to 1 just so we can see things on the simplest level. But of course, if you have a higher or larger account, you can increase or decrease your quantities depending upon, what you want to do. You can't go below 1 though, okay? So we're going to go long. How do we know it's a long condor? We're going to see on the side, it says buy, and we're seeing calls. We can have a long put condor, but we also can have a long call condor, okay? So on the side that says buy, if we click on that, it'll go to the short condor, which we'll show this example in just 1 second, but we're gonna go over the long condor strategy here with calls. So like we said, and like we showed you guys in that example briefly, the lowest of the strikes is going to be, you're going to buy a call there. We're going to sell the 2 middle strikes, and then we're going to also buy the highest strike. And in this case, we have a width of 5. What does that mean? That means that there is a $5 price point in between each of these strikes. So we start at 140, the next one up is 145, next is 150, and then the highest strike is 155. So for us to make the most money here, we want Apple to expire or to be right in between 150 and 145 come the expiration, come the end of the year, right, in this example. This is utilizing the table. Let's go to the graph so we can see this really, really easy. This is where it's awesome, okay? So on the graph now, this is great because now we can see exactly where we're gonna make money, how we're gonna lose money. So with this, we can see that right now, on the right-hand side, our limit price that Webull is telling us is 50 cents. It's gonna cost us 50 cents to get into this, which means that we're gonna have to pay out of pocket a net debit at the bottom right here of $50. Okay, we pay 50 bucks, we get in, Apple expires or finishes out by the expiration in between 145 and 150. We're gonna make 450 bucks. Awesome. Okay, Apple finishes below 140 or above 155. Boom, we're going to lose the $50 that we put in. Okay, so it's very easy here to see our risk reward. Okay. Now, if I go ahead and I can change the width if I wanted to, change it to 4, to 5, to 3 if I wanted to, up it to 6 if I would like to. I can also go up here and change the strike prices. Maybe I want to go up a little bit more, change my strikes, move them up a little bit. Now I'm talking about the 145s, 150, 155, and then 160s. Now we're going to have to pay about $1.22. So out of pocket, 122 bucks to get in. But our max profit here is $378 if things work out perfectly. So right under me, there's a place order button right here on the bottom of this little spot. That's where you go ahead and you place your order. What you're gonna wanna do though is you're going to want to adjust the limit price. Adjust your limit price so that you can get filled. You may want to start by taking this down a couple notches and then going into your order entry if it didn't fill yet, and then going back and upping that a couple notches. Why? Because what you're seeing right here is a limit price that's factoring in you buying 2 contracts and selling 2 contracts. So when that's happening, you're kind of all over the place. You have to worry about getting in at a certain price on all these contracts. So what Webull's doing is it's trying to get you the best price across all of them. And it's going to say, hey, across all of these contracts, roughly speaking, here's your limit price that we can get you right now. It may not be the best price, so you have to understand that. Okay, now let's jump over to the put side. Okay, so all we have to go do is back to that option chain. Okay, all I got to do is come over here to the right-hand side. That's the puts, control, buy, and now I can adjust my widths a little bit right here, and I can be looking at the exact same situation with puts, and we're looking at the graph, and we can walk things through super, super easy. Okay, that's how it's done. It's the exact same curve, the exact same graph. You're just playing with puts. Okay, so to be honest, it doesn't really matter too much which way you go, calls or puts. But now what matters is if we're looking at selling. Okay, so let's go over this. Let's go back to that option we had before. I'm going to go back in here. I'm going to adjust our width to 5. Let's go up to, let's say, 150 strike as the low, 165 as the high. Now in the top right where it says buy, if I click on sell, boom, the curve flips. So now if I'm going to short, if I'm going with a short Condor strategy here, a short call Condor strategy, what I'm doing is I am selling the low end strike, I'm selling the high end strike, and I'm buying the two calls in the middle, the two strike price in the middle. Okay. Now let me change our contracts to 1 so we can see this. Okay. What we're going to do on the bottom, it says net credit of $175 right now. Okay. Our limit price here is $175. When we're putting this order in, what you're going to want to do is you're going to want to maybe try to up this order a touch, because when you're getting a credit, you're getting paid that money right now. Ideally, you want this to expire with no value so you keep your entire credit. Now, I would always recommend to execute or get out of your trade, close your option position before the expiration, set a limit price, and at least take some profits, because what you're going to want to do is do that, because if something crazy happens the last day, you don't want to deal with that. You just don't want to deal with it. If you're really good in the green, you just don't want to have to worry about, oh my gosh, I lost X number of dollars and this is going to work out so good. So always recommend taking it off, closing that option position, which we've covered in previous videos. It's fairly straightforward. Go into your position list, click on those 3 dots, and you'll go ahead and you'll click on close position, and you can enter in your limit price just like that. Very, very similar to this table right here when you go ahead and enter in your limit price to sell an option, okay? So back to our graph. I like using this. It's easier to see. When we're selling our puts or calls initially to get into this option contract, what we're now looking at is we're going to make our money if Apple, or in this case Apple, is expiring on either end of our kind of of our spread. So if Apple expires in this case below 150, max profit of $178. We keep our credit. If Apple expires above 165 in this case, we keep our full credit, profit, boom. Worst case scenario, Apple expires in between our 2 middle strikes and we end up losing $322, which means we got to pay that money back out of pocket, which is a shame. But in this case, we're looking at saying, hey, we don't think Apple is going to sit in between these levels. We think we're going to see a wild move, but we just don't know which way it's going to go, either up or down. Market's at a tipping point, we believe, and we think we're either going to see bigger downside or we're going to see a really big bull market, and that's it. And so that's how it's done. And it's the exact same thing on the put side. We're just using calls here in this example. So let us know any questions you have in the comment section down below. I appreciate you guys for tuning on in. Thanks so much. Hit that thumbs up button. Consider subscribing if you guys got something out of this video. Check out our other videos. We have a big tutorial playlist going through how to use Webull, tons of option strategies, and a lot more that came from on this channel. Any other recommendations for future videos, again, leave them in the comments. We check those comments pretty much every couple days at a minimum, if not every single day. So you guys will at least be getting heard if you want a certain video made in the future. Links and resources down below. Webull's platform that we can use right here. Get access to some free stocks there. Other trading platforms, as well as a technical analysis trading course if you guys are ever interested in diving into learning technical analysis, how to trade stocks on a more active basis and not necessarily having to worry about buying and holding long-term for your 10% per year. If you want to try to increase that, that could be a great course and a great recommendation down below. Thanks so much, guys, and we'll see you in the next one. Peace.